morning. You're watching Business World Live. I'm Danie Laurel. Happy Friday, guys. It's the start of a new trading day, but first, let's go straight to our banner. President Duterte has approved the Agriculture Department's recommendation to boost pork imports. That's in a bid to address soaring prices due to the African swine fever or the ASF outbreak. But Cabinet Secretary Carlo Nograles clarified that the expansion of the minimum access volume allocation for pork imports will just be a temporary solution. He said the main priority is to help local hog raisers. The DA is also pushing for lower tariffs on pork imports. At the same time, Nograles said President Duterte approved the DA's recommendation to form a so-called Economic Intelligence Task Force. This body is tasked to crack down on smugglers, profiteers, and hoarders of agricultural products. Now, among the agencies included in the group are the PNP, the DILG, and the DOJ. It is co-chaired by the DA and the DTI. Justice Chief Menardo Guevara said he will tap the NBI to investigate price manipulators and hoarders. Meanwhile, inflation quickened further in the month of January to 4.2% year-on-year. That's on the back of faster price increases in food, transport, and restaurant services. This is the fastest pace since February of 2019, and this is also higher than the 3.5% inflation recorded in December of last year, which saw spillover effects from higher prices due to the series of typhoons experienced in November. The Philippine Statistics Authority noted faster price increases in pork and vegetables like tomatoes, fruits like bananas and mangoes. Recall that pork prices have climbed since last year due to a supply impact from the ASF. Inflation in NCR and 12 other regions also climbed. That's led by the print in Cagayan Valley at 8% year-on-year. The region was badly hit by last year's back-to-back typhoons. The PSA notes inflation for the bottom 30% households also rose to 4.9%. That's the highest since February 2019. Okay, guys, checking in on the local unit after that higher than expected and even exceeding the BSP's inflation target of 4.2% for the month of January. You can see on my terminal here how our currency seems to be weakening just a touch. We are now trading at 48.083 to the greenback. You can see that in the 1 month chart of trading of the peso, we've really been trading within quite a narrow range here. We have not broken below those 48 levels as some economists had nevertheless predicted. Let's move on over to global equities, kicking off with a check on Wall Street overnight. You can see the S&P 500 up by 1.1%. The Nasdaq as well. They actually climbed to a record yet again yesterday. That's Thursday, led by banking and tech shares. We've also got crude oil actually touching $54 a barrel already. Now, this comes on the back of corporate profits seem to be rebounding, and also a report over in the US yesterday that jobless claims fell to the lowest since November. There's also some positive news when it comes to the virus front. You've got restrictions all around the US now being lifted. The outbreak seems to be easing. The death rate's also going down. Meanwhile, you've got the Bank of England forecasting that the UK economy is heading for a powerful rebound, especially due to the aggressive vaccination of the citizens. And meanwhile, in France, a new lockdown is not justified at the moment. That's according to their government. So some positive developments there, at least in terms of reopening the economy and on the back of those vaccination woes. Now, you're going to be seeing my terminal in terms of Asian Open. That's up by 1% for the Nikkei 225 over in Japan. You're also going to be seeing the FTSE Straits Times increasing a touch. That's a bump up of 0.08% over in Singapore. Now, let's take a quick peek at our own local index and how we are performing at the open, not quite as the rest of Wall Street and the rest of the region have been opening. We seem to be having yet another pullback. Some profiteers yet again, we're sliding back to 68.72 levels. It's down 0.5% this morning. Now, I did want to focus on one specific sector this morning and see how that's going to be rebounding. This was the focus of our discussion yesterday, the banking sector, that is, on the back of the loan contraction. really the worst in terms of growth that is in the past 14 years. Now, the Banco Central is now banking on digital payments, possibly to boost all of this liquidity circulating in the system. So, Benjamin Diokno, of course, the governor of the central bank, has said that the payments from persons to merchants will be available under an initiative called QRPH. It's very interesting. You're now going to be able to do transactions using a QR code with the small unbanked vendors, such as tricycle drivers, market vendors, and sari-sari store owners. This is actually in a initiative to actually cut the use of coins. This QRPH initiative was launched late in 2019, and get this, transactions of person-to-person QR have surged by more than 5,680% after 1 year, and by 15,700% in terms of value. So very interesting. According to the good governor, we're on track of the use of the QRPH by April this year. We can now use it not just person to person, but now person to merchant. He's also saying that the central bank wants 50% of all payments done digitally by 2023. And he also said, get this, the country could become coinless by 2025. So in just a few years, there maybe wala ng coins. All right, now let's take a quick peek at some stocks that I want to be watching out for today. Cebu Pacific, quickly there, that seems to be opening in the green, bucking the sell-off of the rest of the index. At least that's up by 90 centavos, or close to 2%. Now, this comes as they have announced that Grab's ex-CEO, Brian Koo, has joined Cebu Pacific Air's board. This is together with Kenny Rogers restaurant chain founder Bernardine C. Now, they mentioned that, according to them, Brian Koo has a real passion for actually, operational challenges and basically fixing companies and defining growth strategies. Now, recall that Cebu Pacific was expecting losses in 2020. They haven't announced yet the total figure, but they were expecting those losses to be 25 billion pesos. So very interesting there. Cebu Pacific, as I mentioned, now trading in the green, in contrast to the rest of the local index. Now, shifting on from markets to the state of the economy, we have with us this morning Chief Economist of Security Bank, Robert Dan Roces. Good morning, Dan. Welcome back.
Hi, Danie. Good morning. Nice to see you.
Nice to see you as well. Now, I'm not too sure whether you're happy with this inflation print. Probably, definitely not as expected. Not just not beating necessarily, but really above the estimates of most of the economists surveyed, but even breaching the target of the central bank. What is going on here? Is there any positive sign to be taken from this, especially since we're starving for more consumption?
Yeah, well, first I haven't really seen the month-on-month data yet, no? But that will be very important to gauge where inflation is headed. No? There could be some improvements in terms of some other basket in the CPI, and that would mean, or that would show some demand pull already. No? But what we saw, this faster inflation rate for January, was more of cost push. No? And it's no secret that this was being caused by the pork shortage. No? So so likely there's going to be some items there that would indicate some sort of nascent demand recovery. But it, it's not enough to balance the cost push pressures being emanating from the pork supply side.
Dan, are you still comfortable with this pace, given that, as you mentioned, there might be some one-off issues here? There were the typhoons, diba? But, maybe those effects are still being felt right now. And as you mentioned, the ASF supply on pork. Can you still say that with our interest rates at a record low, the economy can still afford these levels of inflation?
Well, if it becomes persistent, that's a red flag already. No? So I think it's going to be tolerable, and by that I mean the high inflation rate can be tolerable if it's because of demand conditions. No? Meaning there's already some demand recovery, so that's indicative of a rebound in terms of consumption. No? And that's what policymakers want to see. No? Now, if it's because of persistent cost pressures, no, uh, that's something else. No, stagflation could be a threat. No, although it's too early to tell if that's the case, because we have to watch out for the other indicators as well. Now we have to look at unemployment. We have to look at the persistent inflation rate, if it's really because of cost pressures. No, and that would make people uncomfortable. No? But in the meantime, I think, with those policy decisions being made now as regards to the supply levels, the specific of pork, no? So we'll have to see if those will translate to an arresting of the price growth pressures.
Then the BSP has
Yeah.
been preemptive in terms of rate cuts. Do you think
Mm-hmm.
that will be unwinding because of these sprints? It hasn't just been January, but also December was above the forecast. You've got the
Mm-hmm.
next policy meeting on Feb 11, and the central bank has always said that they need some time for all of this liquidity to be entering into the system. But now with these upside risks on inflation, what's your call?
Mm-hmm. Well, we're expecting a hold for the first meeting of this year, but inflation will be greatly discussed. No, I think so that's a very important variable they want to see. Um, it could be that some forward-looking models will say that although inflation might be at high levels now for the rest of the year. Um, it might not be runaway inflation at the meantime. No? So it's not similar to what we saw in 2018. No? So uh, that's right. The policy measures will take some time to permeate into the financial system, no? And likely that's why it could be tolerable to the BSP in the meantime. No? But if we see inflation still tracking higher than the target range, probably this month and the next month, no, yeah, that um, some policy adjustments will have to be made.
Okay. Can you quickly comment on the fact that the loan growth has been the lowest in 14 years, despite the
Mhm.
fact that these rates are at a record low? And does that mean that the policy is not necessarily something that can still be moved around in order to increase the risk taking of the banks?
Yeah, well, it just goes to show that monetary policy alone might not be enough to nudge loan growth. No, um, what will be very good for a loan growth turnaround will be some restoration of confidence. No, and I think that's the challenge to the policymakers at the moment. No, restore confidence, restore sentiment. No, if there's a turnaround there, then we can expect loan growth to improve as well.
Okay. Then, in terms of GDP, can you even give a new outlook right now? We
Yeah.
were already on the opening track of the economy. The vaccine
Hmm.
story seems to be improving day to day, not just in the
Hmm.
Philippines but also globally. You've actually got more vaccine shots now than the new cases of COVID. To what
Right.
extent are we going to be catching up with the rest of the global growth story, and to
Mhm.
what extent are we going to be left behind?
Well, the base case right now is for a gradual rebound. No? Our outlook is one of uh, cautious optimism. We have it pegged at the moment to 7.1% growth year on year for 2021. No? But we're coming from a low base. So what that means is, if you take a look at the actual GDP value, the real GDP numbers, it's going to show that yes, it's better than 2020, but we're still not yet surpassing 2019 levels. No, so that could come next year. No,
Mhm.
if the recovery or the rebound is carried over um, into 2022, no, and we'll likely surpass the 2019 levels by then. No? And then we'll probably hit our regular growth target of 6% by 2023. No? But at the moment, the base case is for a gradual rebound.
Mhm.
Um, Much is spent on the rollout of the vaccine. No? So if the vaccine rollout is done on time and it's managed well, and logistics are not an issue, then we could expect a faster rebound. No? But in the meantime, No, it's better to be cautious about where the prospects will lie.
Okay, and finally, Dan, before we let you go, the consumption story, as you mentioned, is still quite weak. So consumer
Hmm.
confidence has yet to pick up. But can you say
Yeah.
that you are confident when it comes to the government spending and them being able to meet their infrastructure and investment goals, at least this year, with, of course, the debt levels rising? Are we able to finance that with our own, tax collections?
Well, I think there's going to be some infrastructure spending that will happen this year. No, they'll want to enact that. No? First is because it's a pre-election year. Normally, in a pre-election year, no, government spending goes up, and likely the extent or the larger fiscal response from the government will come from the national budget. That's 10% higher from last year. No, and I think around 1.1 trillion will be used to finance around 100 and plus BBB projects that were left unfunded last year. So that's actually um, uh, technically that's good for an economic multiplier effect. No? I mean, imports will be better,
Mm-hmm.
um, employment generation. That's one. Yeah, so um, the fiscal response will have to be done to support the monetary side as of this moment. And we're seeing that already with how inflation is flying away now. So there are some deep economic scarring that we saw in 2020. Um, it could manifest itself as wildcards this year. We're already seeing that in inflation. So, yeah, so the fiscal side, uh, I think, will have to be um, implemented this year, no, to support growth.
Okay, so we'll need to check in, especially on those figures, on what has driven that inflation, if there are actually some demand side pushes as well. But in the meantime, still, of course, cautious on a slower recovery than we might have hoped. Thank you so much for those insights. That was, of course, Robert Dan Roces, Chief Economist of Security Bank.
Thank you.
Checking in on the headlines we're keeping our eyes on, the Competition Commission has ordered Grab to disburse more than 6 million pesos to select passengers in Metro Manila due to pricing issues. The agency said passengers who took the service around NCR from August 11th to October 31st, 2019 should receive some cashback. Passengers would be eligible for a peso disbursement for every total fare of 488 pesos during this period. They could claim the amount through the Grab rewards catalog within the Grab app. The antitrust regulator found pricing issues on the Grab app. That's despite the company insisting that its fare was compliant with the fare matrix of the LTFRB. NEDA is now reassessing costing needs for the proposed Bataan-Cavite Interlink Bridge. That's on the back of the supposed uncertainty over the project's implementability. The agency explains it needs to revalidate the possible traffic demand in the area given the effects of the COVID-19 pandemic. NEDA Undersecretary Jonathan Uy adds the more than 175 billion peso project entails a large cost that is relative to the DPWH's budget, which will be the main implementing agency. However, NEDA clarifies that the bridge is still in the pipeline of government infrastructure projects. It has lost its place, though, in the list of so-called flagship projects. The Public Works Department has yet to respond to NEDA's statement. Recall that the ADB has pledged a loan of $1 billion to support the construction of that interlink bridge in 2022. And that's the first look into the business day. Today is Friday, February 5, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. Have a good weekend. I'm Danie Laurel. We are One News.